Hello traders, you're welcome to this video, and I especially welcome you back to the Forex Geek channel. In this particular video, we are going to be looking at a unique indicator known as the RSI Candles indicator. Okay, it's a custom indicator that helps traders to to understand overbought and oversold levels without necessarily displaying those levels in an indicator window. Okay, I'm just going to be adding the indicator to the chart so that we can understand more clearly. All right. Okay, so as we can see, if I zoom out, you'll see that the RSI candles indicator has already been added to the chart. But zooming in, you need to look closely to see the colors. The reason why it's called RSI candles is because it shows its indications or its signals on the candles. All right, it shows it on the candles. So unlike the traditional RSI indicator, which highlights overbought and oversold levels, remember that the traditional RSI, in fact, let me add it to the chart. The traditional RSI shows us overbought and oversold levels in an indicator window. The RSI candles display the RSI value, the relative strength index value, directly on every candlestick, giving you a clear view of market sentiment in real time. Okay, so this indicator is designed to define only the trend direction. All right, so the RSI candles indicator actually helps us to verify the trend's direction. Okay, so it's perfect for traders who want to simplify their charts and focus on understanding the trend without getting bogged down by extra indicators. All right, now it doesn't mean that this indicator gives accurate signals 100% of the time. No, it's an indicator, so false signals are prone to show up sometimes because there is no indicator that is foolproof. There is no indicator that is 100% accurate. Now, as we can see on this chart, if you look closely, you'll find out that the RSI candles indicator highlights each candle based on the direction of the trend, the prevailing trend direction. Now, can we see that this candle was highlighted in red? Can you see that? You can see that it's as if there is a red shadow, or rather a red outline on the candle showing the prevailing trend direction. Even this blue candle had a red outline. This other blue candle had a red outline because the trend direction is still a sell. So do not think that if a candle is blue, it's going to be a green outline, and if the candle is red, it's going to be a red outline. No, it depends on the direction of the trend. So this indicator basically helps you to confirm the direction of the trend. Then, as we can see, because of the pullback that happened here, this particular candle became a green candle. There was a green outline, right, as a result of this pullback. Okay, so if you want to understand the trend, the prevailing trend, and you want to get insights into potential reversals, the RSI candles indicator gives you the insight directly on the candles. So we can see that up till this point, we had a bullish trend, a prevailing bullish trend up to this point, right? You can see I'm going to recommend using trend lines and using support and resistance zones when using the RSI candles indicator, because these zones, the support and resistance zones alongside trend lines, are going to give you valid insights into potential reversal points. So they are going to confirm the signals given by the RSI candles. Let us look at very brief examples. Now, at this point, like I already highlighted, we had a buy trend, right? And then the price got to the resistance. This is a resistance zone. Now, when the price got to the resistance zone, at this point, the candles were still highlighted, or rather, they were still outlined in green, because the green outline signifies bullish momentum. So the candles were still highlighted in green because the trend line has not yet been broken. Okay, I want you to understand the dynamics. I want you to understand how the indicator is giving its signals. You can see that the trend was still valid in as much as it has gotten to resistance. The bullish trend was still ongoing. So the RSI candles indicator was still showing us green outlines. Watch, you will see that you notice all these candles were in green outlines, all of them. This was a significant pullback, so the candle was quite long, so there was a red outline. But from that point up till here, we can see that we had green outlines throughout, and even up to this point, after the breakout point and the retest, we still had green outline because there was a possibility of a continuation. But right after the breakout was confirmed, that is the reason why after a breakout, you must always get confirmation. Right after the confirmation was gotten, as the candles retested these breakout points and started coming down, the RSI candles indicated a red outline showing that a sell reversal has started. Okay, so at the sight of this red outline, coupled with the fact that we had a breakout, that is the reason why you must ensure you use trend lines and horizontal support and resistance levels, because they are going to confirm signals from the RSI candles. So after this breakout happened, the RSI candles gave us a red outline showing bearish pressure, right? So because there was a breakout and a retest, that confirms the bearish trend that is about to start. So this would have been a good place to enter a sell, this particular candle, at any point in this candle when the red outline appeared. So it would have been a good place to enter a sell. Then you set your stop loss above the breakout point. And up till now, you can see that the price is still going down. GBP JPY is still selling, right? It is still selling. Okay, so if you had set your stop loss above the breakout point, that would have been a great place. And then for your take profit, you can actually decide to use support zones. All right, you can decide to use support zones. For example, you can take your profit around here, or you can take your profit around here. So if you have a good risk to reward ratio, let's say you entered here and stop loss is about 225 pips, that means about 450 pips is a good one for a take profit. So you can actually exit your trade around here or around here, okay, because that's going to give you a risk to reward ratio of over 1 to 2. All right, or you can decide to wait for a significant pullback, all right, before you exit your sell trade. So your exit strategy is left to you, but just make sure you always employ good risk management. Do not trade with an amount you can't afford to lose, and always ensure that your risk to reward ratio is not less than 1:2. Okay, that is it for this video. If you found this video insightful, kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.